Welcome back to Mortgagenomics Canada. I'm Marco Gello, a duly licensed mortgage broker in British Columbia and Alberta. If you're in either provinces and need mortgage advice or service, reach out. One application, one credit check, and access to Canada's top lenders. Today, I want to talk about Vancouver's condo market, where pricing, supply, and interest rates collectively seem to be in alignment. But is it enough of an alignment to take action and move forward with an offer? Are you on the fence with purchasing a Vancouver condo? If so, you came to the right place. Sit back for the next few minutes and take what you will from this video to help you make that decision. It's no secret Vancouver's condo market is oversupplied, but what about some of the other metrics and how things correlate with today's financing and overall market and economic environment? Let's talk about that. In September 2025, the benchmark price for a Vancouver condo fell to 6.21% month over month to $728,000, while the number of active listings climbed to the highest level in years. To give you some analytical perspective, 2 years ago, the benchmark was $768,000. In short, today's market has us at an intersection of soft pricing, abundant supply, and still reasonable borrowing costs. For borrowers able to act decisively, this may be a time to consider when you enter the market while conditions are still favorable, whether the bottom has already formed or is still in the process of forming. So if you're searching for a signal to take action, you've tuned into the right place for sure, because that's the angle I'm looking at. So please don't misinterpret this as an aggressive, now is the time to buy pitch. Take this information as you will, and in the end, have a discussion with your friends, your family, whoever, and continue to do your own research and assess your own personal circumstance. But this is what I'm thinking, and following are some of the points why I think so. So let's start with the current market conditions for condos in Vancouver. Greater Vancouver's sales to active listings ratio for September 2025 sits at 11.3% overall for all property types. And for condos, it's about 13.3%. So this technically means condos are still in a balanced market. Currently, there are 7,164 active condo apartment listings. Clearly, this is a large number, and it's been no secret as we've seen it progressively increase over the past 5 years. It started with COVID, allowing people to work from home, which many did. Then many got even more ambitious and moved out of downtown and out to the suburb regions. But it's also fair to say that things are starting to shift a bit. Like on my desk right now, for example, I have a handful of pre-approvals of people who are looking to make the move back into Vancouver and either sell their current Maple Ridge or Langley or Surrey condo or retain it as a rental. So I'm seeing these applications turn up in real time across my desk. And of course, I get it. It's the smaller Marco Gello sampling size, but still, it's just a small pattern that I'm noticing, and I've seen this play out over, in other varieties in my 20 plus years as a mortgage broker. So I do indeed read into these little changes, of course, and, I casually hypothesize, like I am right now, how things might evolve. Anyways, this is one of those moments, I believe. As is always the case, you have the national headlines that are always lagging. You know what I mean? Like if it makes the evening news, it's already stale or old information already. That type of sentiment. The reality now is that the Vancouver condo market is on the lower rung of being balanced. The market isn't collapsing, it's recalibrating. The Vancouver condo market is currently experiencing a period where listings are elevated, sellers are motivated, and qualified buyers have the upper hand and are abundant. At the same time, housing completions have dropped, currently 40% year over year from Q3 2025. And this signaling that the constantly talked about new condo supply is already beginning to taper off. The headlines implied as though we were going to constantly receive a massive influx of this new condo inventory every month. Obviously, it's going to subside. And what's looking like here in Vancouver, it's going to outright pretty much grind to a halt. It's looking like we are arriving at that point, and now we just pretty much sit back and wait for the process of absorption to take effect. Once the absorption picks up, today's oversupply begins to decrease. And this now becomes the metric going forward. So here's what's going on right now. Benchmark condo price fell 6.21% month over month to 728,000. We've got a level of condo supply we haven't seen in a decade. Sales are slow, and days on the market have been very long as well. And interest rates have come down below historical averages, and people might be struggling with this one still. I still think people have COVID rate expectations ingrained in their conscience, but eventually people will get used to the return of rate normalcy. It's not going to get much better than where we're currently at right now. Rates are in a declining cycle, yes, but it's marginal and not very stable. If inflation flares up or sentiment shifts, rate cuts will simply stall or possibly even reverse. But either way, I believe it will be marginal. So I really do believe that today or in a couple or few months coming up, we're in an environment where pricing and financing conditions are aligning. So there you have it. That's the signal that I'm seeing right now. My next point is more of a news media type of observation. Basically, I want to simply point out that Vancouver real estate statistics do not equal Toronto real estate statistics. Both markets are technically in a buyer's phase, but from a population standpoint, obviously, Vancouver's cycle is more shallow. You can maybe say a bit more stable and likely shorter lived than what Toronto will experience. In the GTA, condo inventory is much higher and a bit more problematic, and absorption rates will be a bit more sluggish than in Vancouver, maybe quite a bit more. It's simply a bigger pain over there, and like we're talking months of unsold supply, a bit heavier carrying costs, and broader economic strain from their direct tariff exposure. Especially right now, what's going on with the auto sector. Toronto's correction could likely run a bit deeper and could take longer to normalize. Vancouver, on the other hand, has the potential to show earlier signs of balance. Yes, listings are elevated and sales volumes have softened, but the underlying conditions are different. Construction completions are already falling. Population growth actually remains stable. And long-term supply constraints persist. Now, we don't forget, we still have an ocean, mountains, agricultural reserve, and the U.S. border to contend with. And because of these factors, our land availability is still scarce, and forever it will be. This is why I think Vancouver's current buyer-friendly environment right now will fade sooner than many think. For first-time home buyers, this is a critical distinction. Vancouver's weakness is cyclical, not structural. The temporary oversupply driven by delayed completions and rate-sensitive demand, it'll gradually and eventually give way to a renewed upward pressure like it always does once the overall business, economic, and market sentiment starts to take shape in a more positive way and people's expectations for interest rates normalize. I think the window of opportunity in Vancouver is smaller and more compact than people realize. Obviously, I can't tell you how long that time frame is, but like usual, I think it's going to arrive and catch people off guard and by surprise. And to stay on the topic of real estate metrics, my next point, recognize that national averages can be very misleading. One of the biggest mistakes buyers make is assuming that Canada's housing market moves as one. Clearly, it doesn't. Housing markets are regional, but financing, on the other hand, is indeed national. It does move as one from a national perspective. When national headlines talk about price drops or slowdowns, they're often shaped by Ontario's outsized population influence. That's why relying on national averages can be misleading. The Greater Vancouver condo market is experiencing a correction, not a collapse. Prices have adjusted, listings are up, and sellers are more flexible. But the core demand drivers of immigration, limited land supply, as I've already mentioned, and a stable economy continue to underpin the long-term resilience. In short, what looks like a nationwide slowdown is actually a regional rebalancing. While Ontario wrestles with structural challenges, Vancouver's moderation is cyclical, driving mainly by temporary supply peaks and interest rate transitions. So while Ontario battles to maintain its auto sector, BC and Alberta too are ramping up their natural resources sector. Two different economies here, likely heading in opposite directions. If you only follow the national headlines, you'll miss what's happening on the ground in Vancouver. So once again, potentially a limited term window of opportunity within a fundamentally strong market. My next point here, just want to elaborate on how financing is a national metric as opposed to real estate being regional, and how Ontario's slowdown indirectly benefits buyers in stronger performing provinces like British Columbia and Alberta. The Bank of Canada's policy rate and fixed mortgage rates are common from coast to coast, meaning Ontario's economic strain, especially its sluggish condo sector right now and the increasingly problematic auto sector, can push down borrowing costs, thereby sustaining a favorable rate environment for longer in stronger performing provinces like BC and Alberta. Today's interest rates range from 3.99% to 4.44%, well below the long-term historical averages, excluding the COVID era lows, of course. And potentially more rate cuts could follow into 2026. But as I've said before, remain cautious here because inflation does remain sticky and monetary policy can plateau or even reverse if price pressures resurface. And my final point and extension or return to my previous episode last week or a couple of days ago, stacking policy incentives with today's market cycle. So in last week's video, I talked about the 5 strategic entry points for first-time buyers in Vancouver and outlined the established and still running first-time home buyer incentives. The property transfer tax exemption, the new 1.5 million insured mortgage limit, the 30-year amortization, the newly built home exemption, and to a lesser extent, the first home savings account. Each of these incentives is powerful on its own already, but when combined with today's market, as I've just talked about, their impact is a bit more amplified. So once again, I believe we're at an intersection where all the first-time homebuyer incentives and current market dynamics are in alignment. It may not be a perfect alignment, but I think it's fair to say that today's state will be included in that time range of when the market shifted. Whether we're at that beginning, midway, or of course the always feared upswing moment, I think it's time to at least gear up and be ready. Vancouver's condo market is at a unique crossroads. Prices have softened, inventory is abundant, and mortgage rates are historically reasonable. Whether the market is already bottomed or is in the making of bottoming out in the months ahead, everyone knows these buyer-friendly conditions won't last forever. Inflation risks and shifting monetary policy by the Bank of Canada could quickly change the environment for better or worse. So for first-time or strategic buyers, today's environment offers an opportunity to act while conditions still align in their favor. If you live in Vancouver, you've likely experienced how resilient this market can be, either as a buyer or a seller. So timing that intersection and knowing or feeling when it's your time could make all the difference. I hope I have at the very least left you with some insight or perspective from another angle to consider. That's it for today. If you're in BC or Alberta, reach out anytime, 604-800-9593, or visit homefinancingsolutions.ca. You'll find my past podcast episodes, market blogs, and even my mortgage app, which includes calculators, rate trackers, and a quick pre-qualification feature. Thanks for tuning into Mortgagenomics Canada. Stay well and talk again soon.